Welcome back and happy Friday, everybody. It's great to be back with you after a couple of weeks. I'd missed a week. I was out a week sick, but good to be with you all. Folks, volatility in the markets. Seeing quite a bit of that pop up recently. What I want to do is delve in a little bit more into that, looking at specific indicators that will help us really kind of better understand some risk management techniques that we can really enhance with the ThinkScript technology, you could say, those components within ThinkScript. Looking forward to going through that with you today and looking for some early signs of volatilities that we'll be focused in on here. So wanted to welcome all of you here. It is good to be back with you. And folks, we do have my good, a manager of mine, a good friend, Scott Thompson, in the chat with us. It is a privilege to have him on board. Appreciate it, Scott, very much. Hello to you, Ray. We've got Ray, Rocky, Riceberg. We've got 3 R's in a row there. We've got Tatiana, Scott, David, Life for the Fast Lane, Luke, Will, Mitch, Mighty Mouse, and Ellen. Great to have you all on board, folks. Well, hey, yeah, by the way, definitely consider giving Scott and I a follow on X. Scott Thompson, CS, Mike Fairborn, CS. Quick note on the CS, you want to make sure you have the CS at the end of our handles, because if you don't, you're likely to get an imposter. You got to have the name spelled right as well. But just a quick note on that. Love to have you join us if you are open to do so. All right, well, with that, let's get started with some disclosures to jump on into things here. All right, a quick note, information here is for general information purposes only. It should not be considered an individualized recommendation or personalized investment advice. Schwab does not recommend the use of technical analysis as sole means of investment research. The paper money software application is for educational purposes only as well. A couple of notes here as we do look at it. Backtesting results presented are hypothetical, and there is no guarantee that the same strategy implemented today would produce similar results. Now, investing involves risk, including for some products more than your initial investment, key point. Past performance of any security strategy does not guarantee future results or success. Now, there is a quick note here on futures as well. Futures and futures options trading does involve substantial risk. It is not suitable for all investors. Okay, well, with that, let's go ahead and just share the desktop. I'll get my chat pulled up here as well. All right, some quick notes just to keep in mind here, and this is always important too, because we want to be mindful of what we're looking at in the markets, because in many cases we can determine what kind of a ThinkScript strategy are we going to be looking at. Now, we have had a lot of volatility in the markets, and so there is an opportunity there for us to look at volatility spikes specifically. We're going to tap into that momentarily, but I just wanted to show you something that we've seen over here. Look at this off the bottom, right here off this low. 1, 2, 3, 4, 5, 6, 7, 8, 9 days. It's been a very long time. I don't know how long it's been, but it's been a very long time since we've had 9 days in a row. And you can see up top here that we did just cross above this long-term resistance level, something to be mindful of in the general markets, as well as a 61.8%. I was talking 61.8% Fibonacci retracement level, as you can see we've got drawn here. I talked about this in a discussion earlier in the week with swing trading. We talked about breaking above the 50%, but a lot of traders, folks, will look at that 61.8% as an indication for more of a likelihood in their minds that there is going to be more of a potential follow through to the upside now, as opposed to the downside. Now, of course, anything can happen, right? But like, say, for example, we had a lower low and lower high. If we don't get above the 61.8, if we fade, if we can't get above there, then and we start to break down back below the 50, a lot of traders will say, hey, that's kind of going back in line with market weakness. But once you cross the 61.8 and hold it, of course, you've got to close above it. Yesterday we tested it, we came back down, but if you hold it, sometimes what they'll say is that if you can hold that, well, maybe you're positioned for a move to the upside. Okay, just a quick note there on the markets. I wanted to bring that up because, yes, in fact, we are hitting just above the 61.8 right now as we speak, and we'll see if we can get a close above it. If so, we might actually even close above this long-term support level as well that you can see on the charts. All right, so a couple notes. As we dive into our discussion today, one real key distinct advantage within ThinkScript is having an indicator that you've already got in mind that might be relevant to current market conditions? In other words, there might be some volatility in the markets, which there certainly has been. The nice thing about it is we can take that indicator and we can build upon it using just ThinkScript techniques and tools to give us various indications of what's going on. As opposed to just looking at an indicator, it can tell us what's happening behind the scenes. All right, and so with that, what I wanted to do is talk specifically about an indicator today. I think many of you are familiar with it. We're going to break it down into pretty good detail. And then what we're going to do is we're going to take it just a step further with some more information. And then we'll position it into a ThinkScript. We'll get to that in just a second. But that is the ATR. So the average true range. I'll sub out that RSI with the ATR. In fact, before I do so, let me go ahead and just widen this out a little bit so we can see this. Okay, let's just see. Yep, there we go. Perfect. There is our ATR. Now you'll notice over here that you are getting a fairly big ATR spike. You'll get that in certain market conditions when volatility is high. But let's first start off by explaining what that ATR is specifically. So I'm going to go ahead and just pull up a stock as an example here. This is just Boeing. Boeing, like many stocks, have had recent spikes. And with that, just keeping an eye on the chat here, but you can see that spike that we have over here with this ATR. Now, the ATR itself stands for average true range, folks. It is a derivative. It's derived from the true range of a stock. And the true range is simply what we're getting from a day-to-day perspective. There's a high, there's a low. That's a huge bar right there. But the range itself, so it is the true range. Okay, so the true range is the range on the day, folks. That looks at highs to the low, or the low to the high, whatever the case we want to look at. It's that entire range that we're getting. Now, the range itself can actually be spotted up top here too. Up top, you can see the R right there. And that R is going to change because I'm moving those lines. Like right here to the right, that range right there, as you can see, I'm pointing to it. That represents right there 11.3 points or within that range. So that range expanded, right? And each bar we go to has a day-to-day range change. Now, when we talk about the average true range, we're looking at the average of it. Now, this is an original indicator built by Welles Wilder back in the day, a little while back. But what he's simply doing is he's looking at the average of that range. Notice right there that 14? That is the default. It actually says it right there, Wilder. So Welles Wilder built this. That is on a 14-day range. So all it simply does is it takes an average of that true range. Each and every bar as we look at it. Right? So what is that true range on any day? Well, today, right now, as it stands, the range is 3.5, as you can see right here. Oh, excellent. Scott's made a note in the chat. Really appreciate that, Scott. That's excellent. But there is the range on that bar. Is it a little bit smaller than the average true range? Well, right down there, that's our read of the average. In other words, we take the last 14 bars, we add them all together, divide it by 14, and it's about 7. Very close to it at that point in time. So if you're looking at that average true range, we can see that, yeah, it's been going down a little bit, but there certainly was a key spike right down here at the bottom. Okay. Now, one of the ways that traders will use the ATR, I want you to think about this for just a second, because we're going to tie this in directly into our ThinkScript today. When an ATR, this is the average, it's about 7 right now. What do you think is happening behind the scenes when a stock starts to move, let's say, for example, 2 times that ATR? Not only is it operating within the same range is what's going on, it's sticking within that same channel, what that range has been, but you know, I should say it's exceeding that range, whatever that range is of a normal bar, that ATR. If we go outside of that range, if that range suddenly spikes up, we're going 2 times out of it. So just consider this. Prices are moving twice as much as they normally have been. Twice as much. that is a substantial change in the underlying volatility. And you get turning points a lot of times. Okay? The beauty of this indicator is, folks, it is volatility. I'll just go VOL for short. It is a volatility adjusted indicator. Some traders will use it for potential exit signals, but clearly it is a volatility adjusted. So in other words, it adjusts over time with the strength of the ranges that are changing on those bars. And that is ultimately what's going on behind the scenes here. Okay, so that's a key point, and it's a huge advantage that we can tap into here as we look at the ATR. Okay, and so a lot of companies will have different ATRs, and that's one other quick note, is that they all vary quite a bit. And the beauty is this indicator will add up and find out those individual ATR levels, and then give us a potential indication, a range of where it's changing. For example, if I look at the chart right now, well, what exactly happened? Did we get an ATR move that extended outside of a range here? Was it 2 times on any given day? When the day came in and we came down here and referenced that day, was it ever 2 times that ATR? Well, we don't know just looking at that indicator, and that could be really account for a lot of work if we are looking at that across the whole entire S&P 500, obviously. That could be really tricky to see, and when you get those, they come at a flash. They're very quick. Let's pull up an example right now. Let's look at some of the companies here, like Microsoft. Okay, we can see over here that there were some spikes that popped up at different areas. In fact, that's a spike right here. That's in the average true range. All right, folks, well, let's do this real quick. I did just notice, let's pause the presentation here for just a second. Want to say we do have some special guests joining us that just chatted in here. I got Ben's note. Thanks for letting us know, Ben. But folks, we just had a few hundred friends join us from the Denver Technical Analysis and Option Strategies live workshop. So hello there, Denver. Everybody give them a shout out. For those of you that are already in the webcast, chat in and say hello to our friends in Denver. Did have a little message for each of you there, though. We do have a group of fabulous instructors. I'm sure you're already aware that I myself have worked with Ben for over 15 years. Great instructor, Scott Ray, very good friends of mine. Been out on the road a few times with those guys, and those guys really do bring the energy. So great to have you all there. I do understand, too, just looking at my schedule here, that we probably have Kevin Horner joining the group. Good friend of mine, great instructor. Will offer great support to everybody there at the group, so be sure to say hi to Kevin as well. But I believe that's in Kevin's backyard. You guys are in Denver, because I know Kevin is in Colorado. So great to have you all here, folks. Just hitting some Think Script. So we've got to jump back into that webcast here. So we're going to hit back into our business on this webcast, but just wanted to welcome you all, and great to have you at that event. All right. Well, back to our discussion. Now, on this ATR, you can see how that it does clearly indicate, in many cases, the average true range. Yeah, the spikes that you're seeing in the market. And sometimes you'll see them on the bottom. Sometimes you'll see them off the top. Now, today, put together an indicator here for us, which is an ATR spike alert. Okay, and let's go ahead and throw it on here first so you can see this. But here is Microsoft right now on that ATR spike alert. Now, what you're getting right off the bottom here are a number of spikes that show up right here. Now, we did have Microsoft. Obviously, Microsoft did jump up on earnings over here, but this is not really necessarily a reflection of the ATR line. What this is showing us here is that the average true range itself on the given day, we went 2 times that ATR level. So in other words, there was a rather large spike that occurred right there. And what I'll do is kind of highlight this here for you. Let's go ahead and add in some others here. Let's just look at some of the big names and see what they've been doing over this time frame. So we've got Tesla as well. We can look at some of the Mag 7 here. So look at where, and the way we've got this set up right now is a 2 ATR, but look at this. You've got a spike right off the top here. So it's kind of an early spike signal or potential top. This one came like virtually right at the top here. Again, this is a 2 ATR. When we got 2 above the standard ATR on the day-to-day trading range. We did not see that off the bottom here. In fact, we did not get a spike like we did off Microsoft, and it's actually been quite flat, really kind of holding into a channel here. We've got another spike over here. You can see the big down bar there, but we actually ended up going a little bit higher before we spiked up again. But that is a look at a 2 ATR. Now, what I've done on this indicator, and I'll go ahead and pull this up over here so you can see it in the wheel. We've made some adjustments. Oh, I'm sorry, just to the left of the wheel, right here. So I'm going to go ahead and open up the ATR spike right here. Let's pull it up. These are some of the adjustments made. So you can change that ATR length. This is one that I think is just very common because that is the default ATR. The risk multiplier there, that is the 2 ATR. Some will actually choose a 1.5 up to about a 3. I oftentimes just choose a 2.0 there. Okay, I've got other values just listed below. For the arrow itself, here is the spike that shows, I've got a width of a 5. I just made a 5 width, I put the color in. But this will enable you, with this indicator here, to manage what you're seeing here in terms of the ATRs, size of the arrow, etc. I'm going to pull up another one here, NVDA. Here are some of the spikes that it shows. Again, this is for a 2 ATR multiplier. So when we begin to spike and exceed above that range, high point, high point, high point, you know, kind of a semi-high point. It was right after earnings. That's an interesting correlation too. But you'll notice down here, it's not just necessarily a spike for prices that could be coming down a little bit. It could also be one at the bottom. You'll notice that there is one hidden right in there. You can change the color really easy, as I just had highlighted for you. If you don't like the red, you can choose a different color, like a dark green. You can see that. But this was interesting too, because this showed, at least currently, a temporary low off that spike where we did see the true range exceed 2 times that ATR. Right there. And it actually, you had another one as well. But, you know, could that foretell a move to the upside? We don't know exactly, but it can have a tendency to hit different levels. Now, I want to pause here for just a second and kind of highlight this, that even though we are seeing a lot of these highs with NVIDIA, sometimes companies can act a little bit different. In fact, you could test it like anywhere between a 1.5 to a 3 ATR. Some are just more volatile than others. They have higher betas, for example, okay, in the general market. NVIDIA tends to do pretty well with the 2, and so do a lot of companies. And that's why I've just kind of kept that as the default for this indicator. But this could be interesting for you to see, at least visually up front, first and foremost, so you can get that down. Okay, I want to look at some of these more today because we've expanded on this a little bit. Let's go ahead and share this so you have it all right now. I'll just share this into the chat, and then we should be yeah, okay, let's just share this. Okay, I want to talk a little bit about it too, the actual indicator itself. So here it is, I put it into the chat. I just want to state too that ThinkScripts are not guaranteed for timeliness or accuracy, but as long as the data that's being fed into the platform is correct, it should be working. In fact, this is just built off of an indicator, and that's what's so nice, as I mentioned earlier, is you can, once you have an indicator that resonates with you, that fits maybe some of the market conditions like we're looking at in terms of volatility, you can build these around an indicator actually fairly easily. I've simply just used basically an ATR, and I've added in here, I just referred to it as a risk multiplier. That's all I've done, okay? Here is some of the coding right here, where we're looking at that ATR. We're just simply looking at the spike of that ATR equals the range greater than the risk multiplier times the ATR. It can take a little while to figure this out, but if you just go through it, you know, kind of term by term, it's pretty straightforward. Everything is dictated based upon that average true range. Did use a little bit of Boolean logic because that's either true or false. Does it meet the condition or not? All right, so now you can have it and you can kind of look. This is really useful on the chart itself because you can go back and kind of see, hey, where does NVIDIA, for example, Microsoft, Apple, Amazon, Tesla, whatever, Netflix, whatever you might be looking at, where does it tend to volatility kind of spike around highs or lows? What number is that? And then you can come over here and change that number, right? To alter it. But that's why it's so important to have it on the chart initially first, so you can visually kind of detect, do a little bit of back testing and go from there. All right. So the next thing is how do we use this over a whole basket of stocks? So we could be notified very quickly if we are getting spikes across, let's say, an average number like a 2% or a 2 number, a 2 times ATR. Well, I want to go ahead and show you over the Market Watch tab here. Oh, calendar, let's move over to quotes. And we'll continue on in our quotes. I'm going to take out, if I'm using the S&P, let me take out my 10-day percent. There's only so much we can have in here, and that should help for sure. Okay. Yeah, these are not scripts, so let's go ahead and add the next one in right now. Okay, it is going to be, so I've just titled this ATR Spike Alert as well, just to keep the names all the same. I'll pull it right up here after. This is all out of whack. Here's our symbol. Description, ATR, fine. That's good. That's good enough. Okay. And you can see it's loading up here across the 500. Oh, that's not the S&P 500. That is S&P 500 sectors. That's the 500. Okay. It's going to give us a notification. So the Boolean logic is this. Within the code here is it's going to give us a 1 if it matches true and zeros if it matches false. Now, what I did here, because sometimes on those spikes, as you saw, it may hit a high, it may hit a low, but you might want to know that day or the next day. Now, we could extend this out to 3 days or 4 days after the big spike or whatever the case is. But at least I have it going back 2 days right now. Oh, let me go ahead and organize this too. I'm going to click on the column up top, get this all set up, and there you go. So these are all the companies that have had that true range exceed the ATR by 2 ATR over the time frame that we're looking at right here. And I want to pull up some of these right now so we can confirm them as well. So as you look through this group, Dexcom had been low. Let's pull up Dexcom and see what we've got. We'll keep our drawing tools on so we can cross-reference that as well. Okay, there we go. So we see over here, that is the spike. That's a spike move to the upside. So earnings is associated with it. So we've talked about earnings in this class. We've talked about earnings gaps. Folks, this will also, on a volatility adjusted indication, capture also, gaps, earnings as well, but it is certainly a change in volatility, adjusted volatility 2 times. So not only is it, meeting a volatility, an average volatility, but that's been adjusted over a period of time. So even if volatility was slowly ramping up, it still exceeded that number, and that could be interesting. What else have you seen on the chart? Maybe shoulder, head, shoulder, whatever the case might be. Trend line break, earnings can be a positive. It's still been down for quite a while, but sometimes earnings can get out of the group. Just another little note, we are in the midst of earnings season, so I just thought I'd throw that out there to you. But there you go. So there's one right there that checks off. It's nice to be able to just confirm what is showing up here on the Market Watch tab as an indication, and then cross-referencing that with what you're seeing on the chart itself. So Market Watch and chart. Okay. So let's look at some others. Electronic Arts is up. I know they postponed. What was it? No, so it's Take-Two. Take-Two Interactive Sports. They postponed the GTA 6 for another year. So it's May of 2026 now. So it looks like EA might be running on some of that news, because now, I don't know, are all the other gaming companies free to start creating additional games now? Not sure, but there you go. Here is a spike right here. Now, could that be a top? Could that be a bottom? You want to just be looking for that change, because it doesn't mean it's going to be a top or a bottom right there. That was a big spike right there. And did it continue on higher afterwards? Did we have the high that came in after? We did. We had to close above the high of the low day, and we started to tick higher folks, the trend remained up. So all kinds of additional technicals, of course, you can look at here, but it is cool to be able to spot this from a large group. Let's look at one more. I'll share this and then we'll continue on forward here. Okay. All right, let's see what else. I want to look at STX Seagate. No, Seagate's not there. I'm sorry, I went too low. Let's just do any of these. So Cigna, CI. Okay, how is it doing in the past and where are we at now? Now, kind of looking at more of a topping level. Price action today is down. We're getting the arrow on the top. Has there been a tendency for that 2ATR to spot some of these tops? I'd say yes. I'd say yes. There has been a few of these that are absolutely noteworthy over here that you could look at, but there you go. The ATRs down here obviously are varying quite a bit as we go from one to the other. Okay, let's go ahead and share this. And then every time I go through these, I always just let you guys know, come in here. Well, let me share it, and then I will show you something here. Okay. So again, not guaranteed for timeliness or accuracy. I think I need to put that in the chat too. I think that's required. So okay, just wanted to put that in, but there you have it. All right. Okay, perfect. All right, so there, oh, yeah, so I've shared that there. You guys got it? Okay. Share it again just to be sure. We got that one in. There it is right there. Okay, so you've got it. And so a quick note here, a little bit different, that you'll find on the drawing itself is that when you come over here, you can see that it's plot. It's a plot. And what we're doing is we're changing some of the coding here that you can go through. A lot of that coding just stays the same, but we've got to reference it to the Market Watch tab so we can get this popping up. Okay. Now, some of you do look outside and you have your own basket full of stocks. You can create a basket of stocks in here to screen out as well. In fact, let me just show you how quick this is. I mean, here's the NASDAQ 100. I'd say another very common area, a lot of traders, investors will look at. Let's see if that gets loaded up here. We've got looks like just two. So there's our Dexcom, there's our EA. I did organize that by clicking on it from top to bottom. Yep, and we've got it. So again, it would just show you zeros if it doesn't meet that 2ATR within the last 2 days, and it will show it if it did. So there you go. We actually just have those two. It's a much smaller index, but there you go. Now, one interesting thing to note about this is it did get the S&P 500. If I wanted to look at a larger basket of stocks, I know many of you do like to utilize the scan tab too. So today we just did the entire trifecta. We did charts, we're going to do Market Watch, we just did Market Watch, and now we're going to do the scan tab as well. So we can scan through this guy and look at a whole other variety of stocks. In fact, in the scan tab, the first thing you want to do once you get into the stock hacker right here is click on the box, and then you can go into another category. Like, for example, look at this. So this could be like all stocks. So there's going to be a much bigger basket of companies here, and we can add an additional filter in here. But we want to say, yeah, let's look at all stocks here, but our closing price is going to be somewhere between, maybe we don't want it, down in the penny stock range. We'll just say, gosh, at least $5 up to maybe not too high, whatever range we want to look for stocks. Well, there's a 60 right there. So 5 to 60, we're going to have quite a few matches, 5,911. Okay, one more. We'll get a little bit of fancy here. We'll go to study down below, and we're going to select down here volume. We'll just say, hey, we want our average volume, a 50-day average of volume, to be greater than at least, bare minimum, let's just say 250,000 shares. And that's on average. And so just imagine we're putting a moving average on that line. And so these are just a couple of additional criteria that you want to have in place, okay? So this is going to give us, I'm just going to run through it, about a little over 1,800 companies. But If we go in and add our filter over here, I'm sorry, not add the filter, I've already saved it. So I'm going to click over here in my box. I'm going to load this up, and there it is again, ATR spike alert. Oh, dang. I got to add it. I did it backwards, sorry. Let me just add these in real quick. So I'm just going to go back to closing price, 5. That's right, because I don't have these additional criteria saved in there. So I'm going to back this guy up. There we go. We'll go to 60. We'll go ahead and hit our volume. That's a fairly common one, just to ensure that you, well, try to help ensure that you're not getting low liquidity stocks. Since you're looking for all stocks, in fact, I'm going to clear this into all stocks right there. Okay, so I had to change all stocks, and there you go. Let's go. I think we said 250. Yep. Okay, there we go. Now all we got to do next, you can have your different columns in here, whatever else you want to look at. But right now, we're just focused in on that spike. So much bigger basket, but customized to what we want now because we're using the scan tab. Okay, that's how fast it went through 1,800 stocks. Crazy, right? Super fast, but that's all it took. Let's just look at one of these. Now, many of these companies I've never heard of before. This information technology company, they met all the criteria in terms of volume. Well, let's see. What was that volume over here? It's probably, yeah. Okay, just pull it up. ULY. Totally different basket of stocks. Let's see how it does on the chart. We use it as a 2ATR. ULY. ULY. Okay, now you can see where those spikes are. It's a smaller price stock. It has some huge moves. That's another sort of a risk factor that you can keep in mind here because it's not, you would say, is commonly traded. I think the volume, as you can see over here, just began to barely move up that we can see. I would say that over the last 50 bars, that's what's causing us to move higher. We had huge volume on those days, but on average, I mean, like day to day to day to day, you're not getting a ton of volume. So there's other criteria you want to keep in mind there, but it still did an interesting job of finding different areas where there were, major spikes. You got a double one right there. Who knows what's going to happen? Who knows what's going on with this company? Like I said, these are companies, folks, I've never seen before. You probably haven't either, but you can scan for them, especially if you're looking for, let's say, small cap stocks, like a large basket of small cap stocks that might not be categorized exactly the way, what's like already sort of pre-listed in the Market Watch tab. You can adjust it to whatever way you want. Let's just choose one more in here. Hilton Grand Vacation, HGV. I don't think that's an S&P 500. I don't think so. Could be, but there you go. Okay. Interesting for volatility, perhaps off the bottom. Get one around earnings as well. But so let's go ahead and share this as well. So you get this. Share that scan query. Not guaranteed for timeliness or accuracy. I'll put this in, and you can go right there. Yes, you can modify it. RG, you can modify these for the searches as well. Now, it depends on what exactly it is you want to modify. How you would modify it, though, is you would come over here. Let's go ahead and go right into it. So this is the script itself. I'm going to pull it up. It's very, very small because it's already using all of that ATR information, right? Okay, but here you go. Like some of the main things you'd want to adjust here would be the ATR length. You can do that right within the script here. Okay, and here is, so we've got a 2 ATR as well. You could change this. And in fact, let's do it. In fact, I'm just going to do something like we should get a whole different basket of stocks if I do this. It's saved in that fashion, but we'll go ahead and try 21 days, and we'll do a 1 point, well, let's do 2.5. 2.5. Let's make it a little bit more stringent here. So you can adjust it right there, click OK, and we'll go ahead and run it. So what do we come up here with? We got 109 stocks. Should be completely different. It should be a whole different basket of companies. Not completely different, but should be different nonetheless. Oh, hopefully I didn't push it too hard. We didn't really do too many different things with this, but okay. It's going to pause. And this happens sometimes when we run these consecutively, but I'm in a demo account, and that can be part of the issue. But even if it doesn't pop up, that is exactly how we trade it. Let me just go back and look at that again real quick so we can see it. And here you go. Yeah, So I've just simply adjusted that, and that's how you would do it. And by the way, I want to go over here and point out that we could do the exact same thing, over here in our ATR spike alert. When we want to adjust that, we can edit the formula, pull it up, and you can see that you've got the exact same things up top here as well. Now, this script could also be added to some of the other scripts that we've used in the past. We've talked about gaps before. You could have a gap column. We had one with 3 different types of gaps that show up. This could be useful there. There is the close above the high, the low day column too. And that could be comparable too. As you look at these, the one thing I would say is that this information, though, when it does come up, this is something you might want to look at on a day-to-day basis. It's going to happen quick. We can adjust the look back period as well, but this is going to be happening fairly quickly. In other words, you notice when those spikes occurred, we're giving it 1 to 2 days because the moves can be big, but it will hit on the same day or the next day. But the frequency of looking at this, it might just be something you could park over here on the side and just kind of see, hey, what's spiking today as well, if you wanted to look at the possibility of different positions on these stocks. Okay, yeah, let's see. Yeah, you certainly can. So you can filter out something that is less frequent. That's why I chose that 2 ATR. If you choose a 1.5 ATR, you're going to get a ton more companies popping up. It's the 2 ATR, and you're really trying to represent you're trying to find actually the turning points on the stocks. That's going to be really the key point, or the turning points, the changes possibly in the trend with those ATRs. Otherwise, it's not really giving you an early indication or an early warning sign of a change there. Okay, so how do you add the studies over here. So you saw the script that I plugged in. So it's a good question. This is how we would do it. First things first is you take that script, you copy it, and you can go over here and you can go ahead and just open the shared file and paste it in there. Okay, when you paste it in, you're going to want to name it at the bottom. So if I click over here, I just throw something in here. If I click preview, I can name it down here. And depending upon which script, and I can, I'll have these shared in the description section after our discussion today as well, under YouTube. But what you'd want to do is you'd want to take that, paste it in there, and then go in the Market Watch tab, and then just look for the name. I'm right-clicking on the column. I'm going to go to Customize there. And in this case, it was the ATR. We have had others, though, like the flag reloaded. We've got flags. We've got flag and volume. We've got the TTM squeeze in there, too, the squeeze bars. We got the TTM reloaded as well. And there's a number of these, but that's what you do. You can just find them. You can look at anything here. It doesn't have to be the ones that we created here. But say, for example, yeah, there's going to be some on the RSI or whatever it is. You put it there, double click on it, put it in the column you want, and then you have it over here. Now, if you're doing it in the Scan tab, what you'd want to do is the same thing, right? You'd still open the shared item and save it, but then you're going to find the Scan tab one that we'd shared right here. You'd want to load it back up in there, and it's going to be in your personal list, okay, as opposed to public or top 10. So it's a little bit different process, right? On the charts over here, you just want to simply click on the dropper icon, go over here to the left-hand side, and then type it in here, ATR. You'll find the study right here. Now, the studies that we've created are these studies right here. So that's just an ATR spike. Okay. Okay, cool. Just taking a look and making sure we're all caught up. Questions and anything else coming through? Hello to you, Mike, as well as others joining us that have joined us in the chat, George and others. Just hitting volatility today. We hit that really, we talked about volatility, and we built a think script around the ATR specifically, right? A volatility adjusted indicator that's often used. Traders will use this for potential exits. We looked at it on two different fronts. We looked at a 2 ATR today. We looked at when a 2 ATR hits, how it can, in a lot of cases, help us to identify potential turning points on a stock. These can be different over time, so we definitely talked about that. We talked about them happening at the tops and the bottoms, and we gave a chart ThinkScript to reference what you're finding on the Market Watch tab and on the Scan tab. All right. So with that, again, folks, I will have those posted in the script. Scott put out an early link to our discussion today. A quick note on that. He put out a link so that if you want to, rewatch the session again, there's something you'd like to pick up, whatever the case might be. We did go through some of these a little bit quicker because we did go through the trifecta today. We hit all three: charts, Market Watch, and the Scan tab. So you have those three areas, really the three key areas to look at there when we're using ThinkScript. But so those are all there. And with that, folks, if you like today's presentation, do me a favor, just smash that like button. It does help get the word out. Appreciate that very much. And be sure, bottom right hand corner of the screen, if you haven't already, hit that subscribe button. Really easy to do. Love to have you on board if you're not already. Again, also, wanted to give you the invitation to follow us on X. You've got to get the names right. Scott Thompson, CS at the end, Mike Fairborn, CS. We got to spell those correctly. Otherwise, you're going to find a bunch of other folks out there that are not us, okay? But they do post what we put up, but they're just not us. All right. On that information, folks, I hope you have a terrific weekend. Thank you so much, Scott. Scott was so active in the chat. Thank you so much for your help. Really appreciate it. And to the rest of you, folks, we made it. We're almost there. We're almost there to the weekend. But have a fantastic weekend. I'll look forward to future discussions with you. And I'm always keeping an eye out for your topic requests as well. So keep that in mind. Everybody take care. We'll see you next time.